Ibrahim. Please welcome Faria.
Can you guys hear me?
Faria.
How's everybody doing?
I love all of the reds. You know, did you notice?
This is the first time I'm wearing a red jacket, and it's for her. So she's not just inspiring the real estate, she's also inspiring my
Fashion.
closet. So
There
yes,
you go.
and fashion, yes.
So Faria and I met about a year ago, February,
Yes,
in a mastermind.
in Orlando.
I paid $31,000, she paid less because she's been in it for 8 years, right?
Yes.
And 20% women, maybe?
Maybe less.
That's a stretch,
actually.
right?
That
Probably
is a stretch.
15. And of all of the presentations, Faria was the only woman that got up on stage. I had to meet her, right?
Yes.
So, and because when she would get up on stage, she says, I'm in New Jersey and I do retail and industrial.
Yes, small bay industrial and retail.
Small bay industrial. Is that different than large bay industrial? Yeah.
Well, yes, there's logistics, larger, and we like the smaller unit, but multi-tenant, yeah.
So how long have you been investing?
So I started initially in residential in 2014, I would say. I started in fix and flips, and then I was buying small portfolios of residentials. And I was getting great deals because I was buying in portfolios, so we would buy almost like a whole pie and then sell them smaller ones as turnkey rentals to investors that are passive.
So give me an example of one portfolio that you bought. How many houses and how much was it?
Yeah, so I was buying, even though I am located in New Jersey and I was doing some fix and flip in New Jersey, I came across this portfolio in Ohio, in Toledo, Ohio actually, that we purchased for $130,000. It was 10 single families, so we had $13,000 a pot. And we had them rented out at about $500, so the cap rate was like 20-something when we tried to sell it, and we had a lot of passive investors that bought them somewhere in the $30,000 each. So we almost doubled going in, and then we had the management company in-house.
How did you get into that?
Oh, it's a funny story. So I do a lot of networking. I've been to a lot of networking events, and somehow, somewhere, somebody probably found my email, sent me that portfolio from actually somebody who was in Kenya that is virtually wholesaling this property.
You mean those emails from Kenya
yes,
are really,
and I thought
should read them?
I totally thought it was a scam. And somehow I was talking to a friend of mine, he's like, you know, in Detroit you can buy really for like a couple $1,000s and you can renovate. And I'm like, you know what, let me check this out. Let me actually respond back. So I responded back to him. He's like, look, I have a partner that lives in Toledo. You can go meet him. So I called him, I set that up. And then I had a mentor in New Jersey that he teaches fix and flips and everything in Jersey. He had portfolios of cash buyers, and I know he did some flips in Ohio area. So I called him and he's like, look, I have tons of cash buyer. Let's partner up in this. And you find the deals, you set them with management, and I'll find cash buyers. So we joined forces in that, and he had a list of over 30,000 cash buyers. So I was sourcing the deals. I put a team together in Toledo, and so I think that year alone, we flipped over 120 something.
All right, we have to back up. My head is spinning. Okay, so what was your financial deal with this guy?
So we split 50-50.
Okay, so when you bought the 10 units for 130, you both put in 65, or did you leverage it?
So here's the cool part. Technically, we already had an end buyer ready. So we did, for the very first deal, we did put together just a down payment, but we had the end buyer's fund already. So we almost double closed immediately.
I was just gonna say, did you do a double close?
Yes, we have to do.
Meaning she
Yes.
closed, they closed same day?
Same day, so we didn't have to come out of pocket, and then, you know, as
Or get a loan.
we just rolled it,
Wow.
rolled it right back into it. So yeah, so we're doubling.
But while you had it under contract, and he has this list, and you're emailing out these properties, tell me about your mood. Because this would freak me out.
It's a little intimidating.
10 houses, this is a new partner, you really don't know him yet.
Right.
And he says he has 30,000 cash bucks.
Well, he was my mentor.
How long did you have that relationship?
I would say about 2-3 years. And he's actually pretty prominently known in my market.
So you trusted him?
So I did trust his expertise, for sure.
You said he was your mentor. Was that in a different mastermind group?
This is a different, yeah. So it's not even a mastermind group. He does teach in Jersey. He does smaller events, and he teaches more residential. So yes, I did learn from him a lot, and I know he was pretty well known.
Okay, so you trusted him.
Yes.
So you weren't worried about
Yes.
him. Were you worried that the double closings were going to happen?
Yes, that was a little bit concerning. So for the first deal, we did keep enough reserve between us just in case one of the last moments somebody, but here's the thing, we were selling them for almost triple the prices. So even if we closed on like 3 or 4 of them, we could fund the remainder deal. So that kind of worked out well.
And what year was this?
This is 2016, 17, I would say.
So you guys pocketed a bunch of money for that first portfolio deal?
We did, so that helped me build some good equity. Meanwhile, I was already looking into the commercial side, which was what I wanted to do. So I met Scott in 2015, which is one of my mentors, which is where we met in the mastermind group. So I met Scott in 2015 when he did an event in New York, and then I went to the same event as you went on 2016. And it was a classroom like this, but I talked to some of the members that are in their inner circle, and the energy was unbelievable. Like Aaron just said, think bigger, right? And when I spoke to them, I've been to, like I said, I go to a lot of networking events, I go to a lot of places, and I didn't see that energy and like how you're thinking so much bigger.
Yeah, definitely this group thinks
way
big.
bigger.
Like they read more books than me, and that's pretty crazy.
Yes.
How many women were in the group in 2016?
I think there's like 2 other than myself.
Yeah.
And that were actually investing. There were some of the spouses that are signing on the debt and whatnot, but they weren't actively investing. So that was definitely, I was one of probably the first women there. And I think it worked in both ways. Well, one, proximity is power. So that helped me just being, like Tony Robbins says.
Proximity to power, so
Proximity is
important.
power, yes. That's why I knew the second I was in that room that I needed to be part of that group, because I could visually see where I'm trying to go, they already have accomplished. And why reinvent the wheel, right? So the thing that helped, I think, me being one of the women there, people remember you because I'm kind of the only one or like a couple others. So that helped me in a way to stand out. Even when we go to ICSC and things like that, we see a lot of, I guess I stand out with my hijab and everything, so people remember you. And I realized that the second year I went to ICSC, because a lot of people are coming up to me, oh, we met last year. I'm like, yeah, we met, like, but you don't remember because, all men in their suit, everything, and then you stand out. So that helped.
This is why.
Yeah.
Hello.
Yes, you have your signature color. So that helped, for me to, and also knowing it, right? Like knowing your craft. And I've learned a lot from the group as I sit through all their presentations and the deals that are working on. So when people underestimate you as women, a lot of times, they do underestimate you. And when I walk into a room with my male partners in some deals that I have, and they start talking to him immediately, and they probably assume I'm his assistant. Like, I don't even get the business card a lot of times. And when they start really speaking, and you know the language, and you know what to say, they start respecting you. So that helped, they underestimate you being the only woman, but that really did stand out and help.
When was retail or small bay storage the first commercial?
My first commercial actually was a mixed use, multifamily and retail. That one I was already looking into it when I joined the group, so I ended up taking that down. It was a 9-unit in Jersey. I still hold it.
Did you do it by yourself?
I did do it by myself. I did have an investor, a family business partner, who was looking into it. Initially was looking for him, and then I ended up going into being the principal in that. So I kind of knew from the beginning I wanted to be on the investment side. That was kind of clear.
How much was that one?
That I purchased for $420, and it's worth about $1 million now.
Amazing.
Yeah.
Yay.
Thanks.
How much did you put down, and how much did you each put in?
So he did bring most of the capital, but I did all the work, so it was more of sweat equity on my part. And I found the deal, negotiated the deal, and did the whole full stabilization of it.
So he said, you don't have to put any money in because you found the deal, you're going to operate I'll put in. Did you guys get a loan on that, or he just
We did get a loan on that. So it was actually, it was stabilized, but it was under market rate, but it was stabilized still.
Did you both have to sign on the loan?
Yes, yes.
Now, how does the fee structure work with you and him on that deal? Like, was there prefs, promotes, and we'll talk about what that is.
Yeah, no, for that one not, because it was just me and him.
So it was just, was it 50?
Yeah, it was a very straight
So
up.
he gave you 50%, even though you
It
didn't?
was actually, I had majority, so I actually took 80.
80 per, wait. Yeah, so, yeah.
I don't negotiate in that too much.
Yeah. When we were on our prep call, I was in the car, and I said, did you just say 18 or 80?
80 with a 0.
So 80. So you put in no money, He put in, let's say, 40%?
It was, so it was 30%, so it was
30.
160 something thousand that he had to bring total.
And you got 80% of the upside and he got 20.
Well, that's also, I come in with experience. So the lender actually, because he has no real estate background, he has a whole different business.
Oh, he has zero real estate.
Zero real
So
estate.
he's
This
just
was
the
his
cash guy.
first deal, yes.
Oh, okay.
Yes.
That does make a difference.
That does make a difference because for the lender's perspective, lender wanted somebody who has experience. And even though I didn't have a lot of commercial experience at that time, I did have a lot of residential flip experience. So that did help from the lenders to give the rate that we got, and I had the relationship with the lender.
And so you still own that?
We still own
Is he
that.
still your partner?
He's still my partner on that. We're speaking about him cashing me out on that one. I think I'm trying to get out of that. Yeah, so that was one of the first commercial, and then I got into the retail, which is what I really wanted to do. I found my first retail deal in New Jersey. I found it on LoopNet. It was listed by the seller, so it was one of those that had the ugliest picture because you could tell the seller took the picture on his cell phone, and it was just, it was like 2 o'clock, I go through like LoopNet and
in the morning.
Prexy and 10X like all night. This is what I do for fun. So I was going through this in LoopNet, and I kind of scrolled through this first time. Then I read the address, and I knew the address, like I knew the location very well. And I'm like, okay, let me look into this more because it looks like a very not attractive picture, but I know the location. So anyway, I called the seller next morning, ended up negotiating with him, and I brought in one of my partners that are local, Sandy and them. So I brought in some of the members from my mastermind group who was in that area. There wasn't too many at that point, but we ended up partnering. I got a finder's equity. I didn't initially put in capital to that. I did come in eventually, but for those who's trying to get started and you don't, like if you don't have a lot of money to put in, come in as a finder's equity. And I know I was talking to some of the brokers during the lunch, you spoke about this, your equity under your commission, you can put that towards that. So I wasn't an agent at that time, I wasn't licensed at that time, now I am. But, I came in as a finder's partner.
So they gave you a finder's fee, but
Finder's
instead
equity.
of you taking the money, it became equity in the deal.
in the
How much
deal.
was that about?
I got 5% equity as finders, and then I actually, because it was 3 partners, so we evened out as 25% each. So I did bring some equity later, but I only brought 20% instead of 25. I had the 5% as finders. But one of my deal with them was that I wanted to do the work. I wanted to learn the process with their guidance. So I didn't feel like I wasn't as afraid because I knew their experience and I used their experience to build my portfolio, right, in a good way. So that was a great deal.
How long before you put in the money?
My portion, yes. I would say at least another almost like 6-7 months in. So I did on the renovation side that we need to put in.
Did they fund that?
They funded initially to close the deal.
And do you still own that?
No, we sold that.
Okay.
Yeah, we sold that one. We bought it for $900. We sold it for $1.7, but vacant. We actually were, if we had the tenant, it would be $2 million or more. During COVID, we lost a tenant, and so that's one reason I don't love single tenant. It was a single tenant retail, and we had some storage. The storage did carry the cost, but the single tenant, that was the mortgage-wise, it was still negative.
There's to be 978 empty family dollars.
Yes, I know. I saw your Twitter last night.
Yeah, so let's fast forward.
Yeah.
Talk about a deal where you have multiple partners, it's syndicated, prefs and promotes, so we can talk about that.
Sure, so I'll talk about the one we just did in North Carolina. So I'm actually, we're nationwide, so we do all up and down the East Coast. We have properties in Virginia, Texas, Florida. We're actually, and Carolinas. We're closing on a Virginia one next week, knock on wood. So I'll talk about this one because this is fresh in mind. So we are buying a 90,000 square feet retail. It's a 17 unit, 9 acres, almost 78% occupied.
Where is it?
This is in Portsmouth, Virginia.
Okay, we talked about
The one I was talking about last night. And this one we have, again, 0 out of pocket. We're 3 general partners. So it's myself, one of my local partners that's in Virginia. He's local, so he's going to do construction management and all that. And I do have another partner that's bringing in or helping me raise the capital. I'll say this. I think I'm pretty good at raising capitals, but it's not my favorite part. I like doing the due diligence. I like doing the leasing portion, and I love everything else besides raising capital. But, I happen to be not so bad at it. But so we brought in somebody who will have some equity in there for bringing in his ecosystem because it's very well connected. So in that property, we are raising $1.5 million. So purchase price is $3.6, and we have about $1 million for renovation costs. So all in all, 4.6, and we were able to have a local lender that's giving us almost 3.2, so 75% LTC, loan to cost. So that's not just the purchase price, but also all the renovation costs. And then the percent, the 1.5 we're raising. We have
What was the rate on the loan?
the rate on the loan, we got 6.15.
Okay, so now you're going to raise 1 point something,
1.5.
and so the guy the partner that is good at this is going to go do, so.
Yeah, so we actually fully raised. We're closing next week, knock on wood. And so yes, we have 5 investors that are bringing in. We have one member that's bringing in $1 million, and then the rest are divided. Now they're getting 24% of the equity. So we're giving 8% preferred return on their investment, and then based on every 60,000 is at 1%. So total 24% we're giving away, and we're keeping between us three 76%.
So no money in, the 3 of you, but you're giving the people that are giving the money 8% interest as
Yes.
long as you have their money.
Yes.
And if there's a financial event, like a sale or a refi, they get 26%, you 3
24%.
split the rest. Do they stay in the deal if you refi their equity out?
They have that option. So we will consider that if they want to, if we refi out, we give their initial investment back, they are still cash flowing that 24%. If we exit, if we make, let's say $1 million, they will get the 240,000. Also during the holding period, if we're cash flowing positive, they get based on their prorated share, their percentage.
So I have never raised money without putting skin in the game. You know, we've spoken about this. I can't even, it just can't even come out of my mouth. So I would love for you to I want you to sell me on why I should give you money and you're not going to put any money in the game.
And this is a question I get every time from every single one of my investors. One of my investors right there, Rami, I should see. But here's the thing. When you're putting in, let's say you're putting in 100,000 with me, that's all you're risking. I'm signing on the debt.
Okay, so you're going to sign on the loan.
Yes, we're signing on the debts. We're risking everything. We don't take a penny out and pay ourselves until we pay you first. And we're putting hundreds and hours of equity. We're finding the deals. We're doing the steps that you probably can't do. And that's the idea, right? So we're bringing our expertise. And I would say initially to lock up the deal, we did put our earnest deposit. That's coming out of our pocket. We're risking the due diligence money. If we don't close on the property, we don't get those back. So we are putting that, but when we close, we're getting that back.
You're refunding yourself.
We're refunding ourselves back. That's included in our rates.
Let me ask you a question. If you put a deal under contract, you put up the deposit, and you spend $50,000 in due diligence fees, and the deal craps out and you don't close on it, do you guys eat the $50,000?
We do.
Do you go to the investment partner and say,
No.
Right.
No, we don't. I mean, we only.
That happened to me
yes.
last year.
Yeah.
Some of you in the room know about that story.
Well, luckily, I never lost my earnest deposit. So far, we
Right, I
always
didn't
backed
lose my
out.
deposit either,
Yeah,
but $50,000 of due diligence fees
Yes,
is
we just did that
choking.
last year. 2 deals and we take pride as a team on that we happen to close less deals and walk away from more deals because we don't go in unless we are so confident in that deal. We lost over $50,000 last year in 2 deals that we're almost at the last day of due diligence. We literally walked away on the last day of due diligence because we didn't feel 100% confident to put our investors' capital in there.
Right.
Right. So
when I did that, we had 2 points. We were buying a $3 million empty bank, and I had 3 fast food restaurants ready, LOIs, $75, triple net, crazy pricing. The city's impact fees were $500,000, so that was, and I didn't know, we had impact fees that we had heard what they were, but until you are in the city and they tell you. And then the construction costs were $2 million more than what I thought. So I called the tenants and I said, "No, I'm going to drop the deal." And we had 2 points. I was going to put in $300,000, so 10%, raising 2.7. Many of you in the room were part of that deal. And when I said we can't move forward, I called the tenants, and the tenants said, "We'll pay 100." No, I called the tenants and said, "We'll pay 100." And I went back to the numbers, and the numbers still didn't work. And Josie was going on vacation in 2 days for 3 weeks. And I said, "You know what you were doing tomorrow? You're wiring back $2.7 million to all those people that gave us the money." And I said, "Let's jump on Zoom so I can tell you all what happened," because I couldn't make all those phone calls, and money's going to show up in their account, they thought. So, and I just said, "This deal won't work. The ROI is 3% after the tenants pay 100. And I thought the investors were going to be upset with me, and instead the investors said, we're going to give you double next time.
Yeah,
because
not...
too many people close on deals that right up front are not going to make it.
Right. And so one of the lessons I learned after last year of losing a lot on the due diligence is, so now we want to make sure before we go into actually spending for inspection for phase one and everything else that comes with surveys, we want to make sure all the numbers work way before, because before we would, we had two steps. We're already doing the financials, we're going through the leases and all the details, and then we also start ordering the inspections and phase ones and all that immediately, because they take time as well.
Because you have a short due diligence,
usually. Right, so we made sure now moving forward, we try not to, we try to run every scenario for whatever reason it could not work before we actually open our wallet to start ordering the inspections and all the third-party reports that goes into it.
Okay, so do you have a larger deal where you have more partners?
We do. I wouldn't say larger. We did. So I think one of the ones that I had more than 4 or 5 partners. And again, we do family friends. We don't do open syndication. We did the North Carolina deal that Rami was part of too. That one we had 9 investors. So that was one of the larger.
How many general partners?
3 general partners.
Is it always the same 3?
It's not always 3. It's not always same 3. It depends on, so 2 of the partners one of the partners that's in Virginia, he was in it, and we had a different partner. I try to be strategic when we bring in general partner. It has to be somebody either who's bringing the deal, who's bringing the experience, or they're local, physically close by where they can contribute something. So that's when the general partners come in. So this one we had 9. We bought that for 1.8. We ended up stabilizing immediately, and we actually sold it for 3 point something. It had some environmental challenge, otherwise it would be like 4 by the time we stabilized.
And what was the pref and promote in that?
So pref was 8%, and the promote, it was 60,000. 60,000 was 1% equity, and the total raise was 780, so 13%. So we gave 13% to the LPs, and the general partners kept 87%.
87%. I won't give money
pocket.
on 50-50 promotes.
Okay, so this is a little mind shift when even I was talking to my partners who's raising capital now, because it's also new for him to raise capital, but he has the ecosystem. And what I tell him is, you are the price. You are bringing the opportunity that these investors don't have, or these partners don't have. So you have to go in that perspective that if you sound needy, or if you sound like you need their money, that's not the case. We have the opportunity, and we'll take it to somebody. Somebody will invest because they see the opportunity.
And I think that is,
and
so
that
I'm 20-80, 20-80, maybe 30-70. So, but because I'm from an era for 20 years that there wasn't all of this money. There is now all this money, and there are no deals. So I understand where my friends are now, where they were 30-70, now they're 50-50, and I'm like, it is absolutely a shift for me to go, what? And then I'm hearing 87-13.
The other thing is, we're not charging for fees. Yeah, because a lot of times when they are giving you 50%, but they're charging fees at closing, at refi, at
Guarantee fee
every step of the way. So here's how we calculate, so I'll give you a little bit on the back, is we want to make sure that our investors gets the 2.3 multiplier. They get the 20% IRR. So we want to make sure that they meet their requirement, right? And we tend to find deals that has enough meat on the bone, where after giving 8% prefs, we reverse calculate to see what percent equity we have to give, and depreciation, so we give depreciation as well, what percent equity and depreciation we have to give our investors to meet what they need. And as long as we can meet that, whether that's at 13% or at 50%, it shouldn't matter, because I'm providing what you need while we're taking all the risk.
Tell me about the fees real quick, because we're going to wrap up. What are the fees you charge?
We don't charge any fees. Zero fees.
No acquisition fee?
No fees at all.
No disposition fee?
No.
No leasing fee?
No.
No.
I mean, we paid leasing commission if there's
a tenant rep broker, but you as the leasing agent?
We as a leasing agent.
No property manager fee?
No.
No asset management. These are all the fees that get charged.
This comes on,
no,
and this is why we can give the return we give.
Tomorrow, when Natasha does the OM analysis, she's going to talk about that. The most important thing that you all need to be looking at in these OMs are the fees, because they're not there.
Yes.
And I say, where are the fees? Where are the fees? Send me the fees. And then all of a sudden there's 10 fees. And that's
Absolutely.
a problem because that person,
Is making money every step of the way.
they're only making money on the fees.
And that's, fees taken off from the beginning. So in our case, we don't get anything until we actually doing the work, paying your pref return
Yeah,
first.
if they
and
win, you
there's
win.
Exactly.
And that's how I feel, but I do charge some fees. I
Then
charge
there's
leasing
nothing
and
wrong
management.
with that because it does take a lot of hours.
I charge construction management fee for Jessica if I need. So you're going to have a breakout.
Yes, I have a breakout
But
room
your
tomorrow.
breakout's going to be different.
I'm doing market analysis, and I think I chose that because I've been in different markets, so I'm not so lucky to have all my deals in my 10 minutes from I'm also in a tougher market, so New York, New Jersey market's a little bit tougher and a barrier to entry, so we get a lot more for our dollar if we go a little bit further south or Texas. We're also looking to Chicago. So I had to learn a lot of different market by doing the analysis to get into that market to see if it's right for us. So I am covering market analysis tomorrow morning.
Yes.
Yeah.
Phenomenal? Yeah. All right.